Hey everybody, DayTraderRockStar here. I am the host of Day Trading Radio, high probability setups, the school of stock, and many other trading forums and tools. Tradeometer, the Rockbot. You might have watched the show sometimes. We're on every day, DayTradingRadio.com, broadcasting the markets from probably around 7:30, quarter to 8 until close every single day, and then we have some nighttime shows that we have just a great trading community. It's always active, always thirsting for knowledge. And we have a great community, and we have a great trading method that we trade each day in our chat rooms. I'm going to be doing a couple things in this video. I just want to kind of go over things because it's just we're getting to a very serious part of the market right now. I do believe we're putting we're getting closer to a bottom. It's very hard to say we're putting in a bottom, but we are going through that process. Is it the true bottom? That needs to be seen. I do think we do have a rally in front of us, and we are looking at the futures up here today. Actually, this is a live shot of the S&P, the E-mini, or actually the MES micro contract, which, same thing pretty much with the E-mini, the S&P futures. And you can see actually we just had a nice little pop up here. The markets are up almost 30 points going into Tuesday. Now we've every morning get in there, and I'm a pretty much a futures trader when the market's in a very bearish tone, very volatile, not want to be swing trading. We kind of fall back onto our scalping, and we really I've realized, and I think a lot of people out there have realized, I've been getting a lot of great feedback in our chat room on the success people are having staying out of danger in this market. And that's the wonderful thing about trading like futures or scalping or the pure day trader, in and out in the same day, not holding things over. There's so many different aspects to trading. You could be stock trader, you could be an options trader, you could be a futures trader, you could be a swing trader, you could be a position trader, you could be a day trader. There's just so many different ways you could go with trading, but we're going to focus on day trading, or scalping, fast scalping of the futures market, which opens this up with the new recently the micro contracts have been brought to the table, and you're allowed to use these micro contracts, which are basically a smaller denomination instead of like the the E-mini contract which was a little heavy for some beginner traders because the market's so volatile. I mean, I've seen the market now move 20 S&P 20 points in like 10 minutes, and that's even 5 minutes. It really, you could see these huge moves, and that's a big move if you're on the wrong side of it. So these micro contracts have made it easier for people to step into the market and learn the craft of trading without really getting run over in this environment. Well, it really does help, for beginner traders, but you also have to have a good trading style, and you have to understand, how to trade. And I teach a technique here. It's a divergence technique from George Lane that I've been trading for years. I've started trading back in the 90s. It's called the mid 90s. Started being real serious in my trading after the tech bubble, probably 2008, 2007. I started the show. 2007, this Day Trading Radio, I started that in 2007, and then I actually did quite well in the financial crisis. But from that point on, I really started trading more of learning more about the divergence technique and understanding every aspect of it and trading every aspect of it. And over the years, I could confidently say that I feel like there is nothing out there, nothing at all, that comes even close to the setups we bring to the market every day. I look back at the setups that I take. I back test. I spend a lot of time in this market, and the setups that we take are usually spot on. The only thing that kind of holds us back is our own fear, greed, and impatience. The setups will come because the setups are so defined, and that's what I teach, a very defined, logical approach to the market. And even at this point, where I'm going to be starting to do a new series of videos, or adding to what we have, our methodology, the HPF methodology, the divergence methodology, the Rockstar methodology, call it what you will. It's really a business plan on how to be successful trading short-term futures. And I think this is a fantastic opportunity to kind of really take this to the next level. I've written courses on this. I've taught. I've done a lot of speaking engagements at the traders shows. I've been in trading contests. It is I am excited to teach it. And not everyone's going to be successful with it because everyone has to deal with their own demons. I always tell stories on the air of times when I was trading with some of my friends back in the late 90s during the tech boom, and it was just easy money, and we had so much money. We were opening up accounts for friends, and I was opening up accounts for friends with $10,000 in them, and and we'd all come over, and we'd all trade together, and then at night there might be days that they wouldn't come over, and what I would tell them, don't trade without me, but every single one of them traded without me. They thought they could learn. They thought they could do something on their own. They go, this is easy. I want to do this. And they all blew up. They all blew their accounts up. And that just tells you, most people will do that. You're going to go there. You're going to learn something from me. And then you're going to go and try it yourself, or you're going to get greedy. You're going to feel like there's some kind of emotion or some kind of thing that's going to take you out of the strict flight plan that I'm going to give you. And once you diverge from that, either way, you're on your own. Anything can happen. And that's another kind of a disclaimer. Anything can happen. If there's news, then all bets are off the table. Even a great setup will be affected by any type of breaking news and stuff. But I am super excited to teach this. And knowing that I'm giving away my knowledge, my confidence, and working as a team with the traders, we just become better at it. So I kind of almost want to, develop traders around me in our area, so we work as a team. The more traders we have identifying these setups, analyzing them, taking them, giving the confidence, giving feedback to the newer traders. That's all that happens here at Day Trading Radio in our chat room. So I love that aspect of it. And I don't mind teaching this. And I don't mind saying this is the best thing you will ever find, but you will try to find something on your own, and you will probably fail at it. And I hate to be like that because we've all done it. We've all been there. All right? So that's just, it's a wake-up call, It's not an easy thing to do. And you will try to do something else, and you'll come back to divergences, maybe years later, but everyone comes back. And they'll come back, and there's a scientific method to this. And science is that's what I'm about, math and science, and the rest is history. The rest is we make great calls every day. You see them live, and, the methodology is taught. So I'm going to be doing a webinar on Wednesday, just to kind of let you know. Wednesday I'll be doing a webinar. You could go to the site and sign up for it. It's a free webinar. You get and we're going to be talking about this trading. And I'm going to be talking about it like I'm talking to you right now in depth. But we're going to be discussing it from ground, and I'm going to be talking about the new additional safety nets I'm placing in, because since I've written the courses and updated them, there's a few new things I just want to touch base on that is going to make your trading even better. So I'm going to be kind of touching on those and adding those to the course. It's kind of a coming out party for some new safety nets. And let's see here, what else? That is important to discuss. So let's just, one of the main parts of this video is doing that, just talking about this. Let me get a picture of the webinar up here, coming up here. Hold on just a second. It's already 10 minutes into the video. I didn't want to make this video too long. I just want to point that out. All right, so here it is. This is going to be this Wednesday special live tutoring session. This is the start of something new. We're offering a really good kind of a boot camp, three-month subscription to basically what we're teaching right now, and I'm going to be start doing tutoring sessions on Tuesday for these newer members who do the boot camp. That way we have more of a one-on-one. It won't be exactly one-on-one, but it'll be one on a small group of traders, and they get to ask the questions, really nail down the beginning process of this, because that's the hardest part, is entering trading and not and just just being overwhelmed by everything. And stochastic trading, divergence trading, our charts, our high probability setups, our 5 indicator setups, our HPS playbook trades, the 2020 bull flag, the bull buy divergence, the 200 EMA channel line breakdown, the coiled stochastic channel breakout. These are the top playbook plays, but you might hear that. He's like, what the hell is a coiled stochastic channel breakout? Well, coiled stochastic channel breakout is one of the greatest setups. And you know how I know that? Because I've been in the market this long, that I've noticed it over the years, and I'll mark things off and I'll remember those, and that's how my mind works. It just happens to work that way. I like looking for patterns in the market, certain things that I'll look for that happen over and over again, and doing it for so long in years, then you start to weed out the stuff that doesn't work and focus on the stuff that always works. And that's why we have our playbook trades. These are the trades that if they show up, you take them because they work. Actually, we had a coiled stochastic channel breakout today. It was actually a textbook one. I was able to call it live. Here it is, right here. Coiled stochastics it's in the forum. So if you have if you're on the member and you have the dashboard, go up on the top to the forum here. Actually, I'll walk you through it here, in case you're not a member. It might be something of interest for you. Let me just jump over here to Day Trading Radio. And then we're just going to sign in fast. I have the Rockbot on right now. Rockbot took that trade before. People are like, what the heck's a Rockbot? Well, sorry about that. I'm going to have to catch you up on that. All right, so now we're going to, that's the Rockbot. So when I'm going here to, up here to the top of the dashboard, you'll see. Let me move this down a little. You'll see a playbook. You also see forums. I highly recommend going to the forums. There's hundreds of topics, lots of threads, all on trading, classic stuff in there. And then our playbook here is all the setups that you might hear me take or announce on the radio. Today we had a 200 EMA. Today we have a coiled stochastic channel breakout. So you want to catch yourself up, go on there, scroll down until you see these are the playbook trades. Trading the E-mini. Let's see here. The X marks the spot trade. No. 200 EMA breakdown, channel line bounce. No. 1, 2, 3 pattern. No. Dual stochastic edge. No. Trading plan, downward wedge pattern. No. Coiled stochastic setup. There it is, right there. Coiled stochastics. It's also a great lesson in the School of Stock educational course. So if you have access to that, look up the coiled stochastic, and I do a nice video on it, and I discuss the whole setup. It's a lesson in itself, so I won't play the video right now, but if you want to catch up on it, that's where you'd find that. The coiled stochastic here basically is you identify a nice I would say the coil, and a coil is, for me, it looks like a coil. It's like a wedge pattern. I always describe it by a series of lower highs. You're going from stochastics, going from a 0 to 100. This is how you usually go, like this. So you want to see that kind of wavy action. That really lower. That's very rare to see that. It's usually it goes up and goes down. But if you have four or more little dips like this, and sometimes the third one could be a little higher than the second one, but not as high as the first one. You could be off a little or very close, but you got to have this wedgy type of pattern here. And once you start to see that wedge pattern, you look at the price action, and the price action should kind of set up a channel right above it, a channel right above this. Or in line with the wedge. And what this means is it's just that the timing of the wedge, because the momentum has shifted here, and actually this kind of wedge gets tight, and it's kind of gets real tight here. That's the coil effect. It's tighter and tighter, and then it springs out. And when it springs out of the coil, it springs out of the chart. And it happens 9 out of 10 times. That's the only reason I have it on my playbook, because I've been able to identify that. Now we're able to identify divergences, like right here. This was a divergence we took today, 315. So there's just a few setups I'm looking for during the day, and when we have them, we have them. Now you just have to learn them, and there's little ins and outs, and that's what we're going to focus on a little bit more recently. Like we had a beautiful sell side divergence today. We don't take enough of those. You don't take enough of those. I don't take enough of those. I should. It's hard. It's hard to be on top of every single setup. Normally, I would say that we have probably between 5 and 10 setups a day. And if you could, and again, this is something I'm working on in the business plan, really breaking it down logically, saying, all right, if you start with this amount of money, actually I have a little of it here. Let me show it to you. Let me actually start the show too. I'm doing this video, but I'm going to turn on the volume on the show. Maybe someone's out there and they'll catch this. Kind of launched, and everything's going to be really focused on futures trading, because that's really. I think that's you have your best chance of really making consistent money in the markets. The swing trades right now, it's great to use the same techniques on, the same techniques you'll learn here. I'm always trying to keep everyone happy about, going over stocks or going over futures. The truth is, I think the same techniques you're going to be using for both. Just the longer term. You want to get into great stocks, hold them, swing trade them. Maybe you get the biggest moves in the shortest amount of time, like the 5 to 7 day rotation type of play where you're in the stock for maybe about 5 to 7 days and you take that money again to the next one. And that's our type of trading. I like to call that swing trading when I trade stocks. I like to hold it. Usually get into a divergence, either a 60-minute or a daily divergence, and kind of let the momentum carry it over the next couple of days. Now, this is not the environment really for that, for upside motion, and it's probably too late for the downside. So right now, it's perfect for, taking the market and scalping the market like this. Even with some stocks too, if you're down at these levels, you get a gap down, and you have a quality name, you got to jump on it. So the important thing is having 3 or 4 good setups and having the patience just to wait for those. And once you have the patience to wait for those, all it's about is just taking the criteria and set it in stone. Like Black Sheep today told me he's doing so well because he's all of a sudden used that that automatic stop. He's taking faster profits. He's pretty organized. When you're able to say this is my bracket, this is my stop, I'm doing well doing this, then you continue doing it. You continue to, and there's things that make you will make you even better, because sometimes the divergence will break down, but you should start to realize what causes that. And if you can start to figure that out too, then you really corner the market. Today was I want to just go back to the chart today, and I was trying to, I want to take the trades, but I don't take in big positions because I'm really distracted during the whole day, and once I get in it, I'm taking a trade, but I should have left these on a lot more, every single one of them, even the low of the day. I got in at the low of the day, again, divergence, right? But again, that's, I only talk about what my weakness is holding on to things, letting things go. I see a victory, I want to say, all right, that's my record. I'm proving something, and the only way to prove is to take the profits. So I kind of take profits kind of faster just to prove the point that profits can be taken off of these. But then again, you usually see that upside move a lot bit more. I mean, if I would have taken that trade and then went to lunch, I probably would have came back and it would have been beautiful. And the same thing here, even though I took it off, the one thing I am really working on is taking those stochastic, taking the oversold level, buying only when it's oversold and starting to head back up, or even if there's a divergence, maybe it's not even heading back up. But having that strength in the market today, anytime you get an oversold level like this, you want to be jumping in. Here again, this was a nice sneaky divergence, so I was able to see that because we were watching it. And I got it before any of the bots got it, because I saw that fast candlestick and it came back, and I said, look, let's go in. Look at the stochastics. It didn't even move. That's a hidden divergence. Next candle came back, almost took out the lows. Almost took it, but did not, and took off. And I got a nice pop on it. I took it off. Almost 2 points. But again, you could see how far it went after that. And you know, it's history from that point on. I mean, that was the last great spot. I could have, any of these trades were the best spots. And that's great. That's great. It's bad that I didn't take it all the way, but it's great that we identify those levels and we're able to trade those and not have to worry about anything else. You know, so that's what we're going to continue to do. You got to start to manage your size, because it's easier to take bigger size and then scale out and then have some left over with running stops and stuff. One contract's not going to do it. You know, you got to have multiple contracts, and I'll do that tomorrow. I'll definitely do that tomorrow. The other thing is understanding the parameters, and you know, this is something I'm going to go over on Wednesday a lot with you guys. Whenever I do get a day, we have a day, then I'll bring up the. Let me see. I think I already started doing this. I'll bring up the back tester, and I'll see where the divergences were with the bot and where I didn't take it, or where if it lined up with my. Let's take a look here. Strategy analyzer. All right, so this is just today, and this is on. All right, so this is on the 3-minute time frame. 3 minutes. Type 3 minutes. I'll put it on the other one. 3 minutes is sweet spot. I really do like the 3-minute time frame. We don't use it as much. I have it on the bot. So the Rock bot is running a 3 minute, and on the 3-minute time frame, there was. 11 trades, 8 winners, 3 losers, 72%. That was today, according to the script. And it profited almost $100 trading 10 basically 1 ES or 10 MESs. Taking 6 off after 4, and then keeping the rest on a trailing stop of 12 ticks. Now, I like to see this too, because what's been working for me a lot is a very tight trailing stop. So the tighter the trailing stop, you kind of can really get those explosive moves and gain some a little bit faster. Now, we're not using the stop loss ticks here because we're using the signal bar low. And you don't even need to use the 10 contract. I put 10 here just to scale out. And again, I'm taking it off just after 4. So let's see what the difference is. So that was, what is that? That was 72%, 11 well, it's going to be the same. Let's just see how much it made. That's $87, $90. $90. Let's see. 122. So yeah, it's that's not bad. 122. And then that's basically one ES, but broken down into 10 MESs. Now if I put down 5, and we'll put down 3, and the rest come off, I'm just curious, that would probably cut us down to like 60. So yeah, $61. All right, and that's just the longs, and that's just on the 3-minute time frame. So if you have a 3-minute time frame working for you, you could take trades off of that. Now let's move it to the 1-minute time frame. Now the 1 minute, believe me, the 3-minute always acts a little bit better than the 1 minute. I don't know how the 1 minute's going to go. We'll see. Here it goes. It's running it. I think it's wrong. No, it's not. Let me see. 1 minute time frame. See, it is down. 1 minute is a little choppier with that real tight stop. 68%, 29 trades. So that could get real choppy. Now, what I'm going to do here. 5, 3. I want to bring that out to 12. See if there's any difference there. I think there's going to be much. Okay, a little bit different there. But what I want to do, and again, remember we're looking at the 1 minute time frame. So I want to actually go here I want to go to the chart, and it's going to show us the trades. Now, there's probably just a couple trades. Well, how many was it? I forget how many it was, but here's a beautiful one. That's on, again, this is on the 1 minute time frame. The 1 minute time frame. And what I want to do is put the I want to put the stochastics up here too, because I want to show you how to recognize if it's going to fail or not. Because this is the key. This is really the key. If you're going to be in a situation where you're trading at 1 minute and you know maybe it is a little choppy and stuff, there is kind of signs that the stochastic will fail on you. And if you know over time you start to realize that, and that's what we're adding to the methodology, kind of. And that once you're able to do that, you're going to keep out of all the bad trades, be in the good trades. Things can go really good at that point. All right, here's the 9-3, and because it's all messed up with the 2 lines, I want to fix that. How do I do that again? I have to go to indicators. So I go down to the indicators, and I take my K indicator, and then I make it transparent so I can't see it. Right now it's goldenrod. It's crazy. Oh my! I go transparent's way up here. You can't see it, but then I'll apply that. Then I won't have that. Then I'll make this maybe a little bit thicker. And that is we'll give that a 3 count. Apply that. That's real thick. Well, let's see. Let's move it to 2. There we go. All right, now we have it. Now we have the stochastics. We're only going to use the 9-3. All right, look at that big pop here. Trailing stop up there. That worked really nice. So I'd like the tighter trailing stop. That worked great. That worked great. All right, so this big candle here. All right, so I see what happened here. What time was that? 3 o'clock too. Well, remember, 3 o'clock is kind of an option to not trade in the last hour. I like not trading in the last hour. I don't usually do that. 3 o'clock, I don't know what exactly happened here. It was a very spiky candle. Probably hit some trailing stop. It went, all right, so this would probably divergence here, and then it got smacked down before rallying again. You could see that. So there. And then it was over here we had a divergence. Now remember, some of these are mathematical divergences. To counteract this, you want to take a what we call a visual divergence observation. And you want to make sure that that 9-3 line is not just a phony baloney divergence. This high and this high makes it a mathematical divergence. That's why it came up and started turning up here a little. And it kind of got that pop, but it just didn't get enough, you know, and it got there too late. So honestly, it did give it kind of an aggressive move up. But you know what? You don't want to take a divergence at that weakness or underneath that. You want to have that second divergence line above 20. All right, above 20 on that. And that worked fine. That's nice. It's nice. I think it was just that big candle. That one big candle kind of probably knocked us. Another thing you could do, here's a small little one. It kind of popped and then dropped. That would hit the target. Most of them are right on, but there is some that get choppy on the 1 minute time frame. That's why I like the 3 minute. 3 minutes is good. Let's run this thing on the 5 minute. 5 minutes is usually, you know, we're not going to have as many on the 5 minute, that's for sure. Maybe we'll have 2 or 3. Let me take a look at the summary here. All right. There was 8. 6 winning, 2 losing, for a profit of $55. But I would always run this on the 5 minute. The 5 minute really is key. That's just a nice time frame. 3 and 5 minute are great. 1 could be a little volatile, but if you know what you're looking for, the 1 is great. You just want to be able to be very fast on your rotations on that. And as like these are all the little secret little things that you need to know. You can't just say, well, that divergence didn't work. Lots of times those divergence will work. You'll get a fast rotation. You just didn't get up, This was a kind of a that's a real tight. I have only a 4-point trailing stop, so it's very tight too. All right, yeah, I don't want to go off track on this video too much here, but I just want to go over is when you start to kind of back test and you see, you're just kind of trying to get to the areas where you want to go back and see what failed. Sometimes it'll be a news event. Sometimes it'll be a technical level breakdown. Lots of times it'll be something that you'll recognize that caused the breakdown. And the other thing you want to actually check here, and I go to my charts, and this I'm going back to the 3 minute one, 3 minute value. We're going to go to the chart here. And I got to bring that back up here. Let me do that fast. This one's kind of BS. I got the stochastics on here. You can see that the divergence here, it's just a candle, I think. This was actually the follow-up divergence. It was kind of a running divergence. There was a slight divergence that happened here. Because I took this trade. Did I take this one? No, this was at in the middle of the night. That was a beautiful divergence. It was a nice low and a lower low and a much higher low. And visually, that was a much better divergence. That visual divergence versus this little one, which it was over here, which probably was caused by this candle. Was going down. This one was going up, so it was a little divergence there, and it had a little move. But this was really the one you want to take. So this is something I would have taken on this signal right. It's a beautiful divergence. I would not have taken it there. No way. Just not. Wouldn't see it and stuff. So again, sometimes you're looking at these that give you some opportunities to see what you could have done better. But most of the time we're spot on. But the simple thing is watching for the low and the higher low. And then from that point on, analyzing it and watching it based off your 9-3 stochastic rotation. And once that gets rotated back up, you should start taking profits, start taking profits. Don't worry about anything else. Don't worry if you're right or wrong. It doesn't matter. You're right because you just, your account size is going up. When that happens, you're always right. And that's always great to have multiple cars, multiple contracts. That's going to keep you sometimes in the game, just to kind of give you a little peace of mind. So we're going to be going over a lot of that during the webinar on Wednesday. Excuse me. Right now, the market seems to kind of be drifting here, 2450. I'll finish off the video here with a little analysis of, this is the LABU. Actually, you're going to be paying attention to those leveraged pro shares or directly on, the three-time bullish or bearish trades in this environment, because they're going to give you the biggest results. Like we got in the SSO today. SSO is the 3 times bull S&P. This is a nice rotation on the daily. Everything here looks great. And we kind of, after Thursday, then we had Friday sell-off, and then I put out my watch list, and I said, I don't think we're going lower. I don't think we're going lower. We're not going to go past this low here. This is just a 50% retracement. In reality, it actually made a higher high and a higher low. Overall, Friday's action was bullish. It was kind of, it sucked. It kind of sold off and ended at the lows, but it didn't give it all back. And that kind of left us open for another push and a big chop to the upside. And that's what I was looking for, today. And it actually played out. It played out perfect. We had a nice pop. We consolidated. And on my chart, I even said that, this trend line right here is my, let me see if I have it. I wonder if I have it on here. Yeah, it is. Downward trend line is my buy trigger around 36.50. So 36.50 at the time was my buy trigger, right where that line is. And we popped through that. This is going out from Thursday. This is what I was looking for. And that's what we got here so far. Now we're kind of extended on the hourly, but the daily still looks good. Won't even mention the weekly starting to turn back up. Huge. That's huge. And I even got Paul talking to Paul today. He said that even the monthly was perfect and oversold. So let's take a look at the monthly. Yeah, the monthly here could be pretty decent oversold level on the monthly.
Order submitted. Order filled. Order submitted.
All right, we got it.
Order submitted.
So what are you looking at? Yeah, so 4,300, 4,000 is good. So I'm liking this trend line, this downward trend line. This is an original 1, 2, 3 pattern we've been following. Even though we broke down here, I've talked about the capitulation moves, news, and channels, and when you have an established channel and the mean average of that channel stays the same, even if we break down through it, the closing prices are this is a weighted trend line here. That has all this history behind it, from this pivot, from this pivot, from this pivot, closing price, this pivot right here. Yeah, it broke down, but it doesn't mean that this doesn't still have a lot of value to it. So we got back up to it. Now it continues to recognize that value, all right, because it has a history there, and it starts reacting to it again and again, and it gets back into a rhythm with that. So it gets back into, right into that rhythm again. And that's why I always love these retests of these old trend lines that were broken. They tend to come back. When we break down through a trend line, we break into it, always trade the retest of it. This was a great capitulation of the trend line. We closed back above it. Now we're reversing out of this trend line, but we have this big area above us. So we have an old 1, 2, kind of an old pivot here. So this all comes into that 4,000 level. It's X marks the spot, downward trend line, rising trend line. Maybe by the time these candles get over here, we're probably up here around here. Maybe a little lower, maybe a little higher. But I do like the higher ground here in the medium term. I'm not predicting when we're going to get there, but I think the risk reward right now is great. I think the risk reward here in net here is really good too. I took that trade today, and I'm really happy about it. And it was, looking back at this, and remember when the earnings came out on this and how they came out with good earnings and they're expecting good things, and it's kind of pulled back and never really got any footing here. And this was the first up day, and that's why I marked it off. I said, this is going to get some follow through. We haven't had any real significant follow through in this stock. So this would be a perfect opportunity. It's also,
order filled. Order canceled.
So looking forward to that one over the next couple of weeks of moving higher. And we have earnings this week. Don't forget, we have Tesla and Netflix. We did pick up Netflix today, NFLX. And you just say we didn't do stocks. Netflix looks really good. Closed up here. We're in at like 240 and change. So we got about 8-9 points on it. We're looking for 250 today, and it hit it hit it on the nose. And this after hours here, we closed out at 8 o'clock here after hours. It's looking okay. We'll see what happens tomorrow. I'll probably take it off before earnings. The more I'm thinking about it, there's a lot of comments coming out on Netflix. If we get a little further move up here, maybe the 253, 250, 255, maybe even, I would take it off. We're already up nice on it. I was almost thinking about holding it into earnings, but that's not always the best. That's not a safe play. That's a gamble. Gambling's not what I'm doing today. Or any time I try not to. Sometimes it's fun, but what I'm really excited about for is, identifying a longer term, even if it does go back down, we're getting close. Those divergences are going to start showing up. Maybe we get a weekly divergence. Maybe we get a 5-minute divergence. I'm looking forward to trading the futures tomorrow, and taking multiple contracts and kind of establishing that trailing stop right at break even. Even though I hate putting, one thing I will tell you, I hate putting my break even live on the platform here. I just feel like, the market, the electronic snake will come back and grab most stops and stuff. So I always try to manage it. I've been putting the stops underneath the previous divergence low stop, but with the trailing stop, I'd like to just kind of feel it out, let it run up. We'll work on how we're going to set that up tomorrow. We left some good gains on the table today. Impressive. We were in at the lows on every low that we had, and all of them, there was a reason I got in on those. All of them. Most of them were divergences or quad rotation. So, looking forward to doing that again, but in a bigger way tomorrow. I'm going to send the video out. It's going out to the public. So, again, you have to sign up for if you're not a member, you have to sign up for the webinar. It's a free sign up. You could do that at dtr.tv/free, or look in the link. The link in the description there. All right. Let me send this off in its way here. See you guys in a bit. I'll see you in the markets tomorrow morning. I'll stick around with you guys here tonight. I was going to probably take a trade here. I think we're going to get a divergence set up here soon.